Welcome to What's Hot in UAE, your go-to online magazine for all things cool in our cities. Whether you're a fan of massive concerts, exclusive sneaker drops, buzzing nightlife, the latest in crypto trends, or the latest in lifestyle, we've got you covered. From the hottest events to the coolest hidden gems, we bring you the inside scoop on everything happening in the scene. So, let's dive into some of what's happening this week right here on What's Hot in UAE. Let's get started.
Welcome back. Today, we're diving into something pretty huge happening in the UAE's financial world. We're talking about Federal Decree Law number 6 of 2025. It's kicked off, a massive overhaul. You've probably heard whispers, billion dirham fines, new powers for the central bank.
That's right. It's more than just tweaking the rules. This is a fundamental rebuild of the regulatory landscape. And what we want to do today is give you a kind of practical survival guide, help you understand what these huge changes, the penalties, the new consumer body, Sanadak actually mean for, how you operate a business or what your rights are as a customer.
Okay, so let's set the scene. This new law, Federal Decree Law number 6 of 2025. It officially takes effect September 16th, 2025. And it basically throws out the old rulebook, right? The main one being law number 14 from 2018.
Exactly. Replaces it entirely. And the key thing to grasp here is the why. This isn't just housekeeping. It's about building the single, really solid legal foundation for everything financial. The UAE is basically saying, look, our financial system meets the absolute top global standards. Think FATF compliance, market integrity. That level of seriousness. And part of that means bringing a whole load of activities, especially in tech and fintech, formally under the central bank's watch. Stuff that maybe wasn't explicitly covered before.
Right, bringing more players into the fold. And when you talk about seriousness, that really comes through in the enforcement side, doesn't it? There's this feeling of a zero tolerance approach now, especially with the fines.
Oh, absolutely. That's probably the bit that grabbed most of the headlines internationally. The sheer scale of the potential penalties is just skyrocketed.
Okay, give us the numbers. How big are we talking?
Well, under the old 2018 law, the maximum fine an institution could face was 200 million dirhams. Still a lot of money, obviously. But the new law, it bumps that maximum right up to 1 billion dirhams.
1 billion. That's, wow, a 400% increase on the maximum.
Exactly. It sends a very clear message about the potential cost of noncompliance.
But hang on, is just raising the maximum fine enough? I mean, does a bigger potential penalty automatically make institutions behave better? Or is it more about, say, how often they actually get audited and caught?
That's a really important point. And it's not just the size of the fine, although that's obviously significant. It's also about the CBUAE, the central bank, having, much sharper teeth to actually enforce things. They've got some powerful new tools now. For instance, the law explicitly allows the CBUAE to take penalty amounts directly out of a violator's account.
Directly, without waiting for court rulings.
Even before a final judicial decision in some cases. That's the really striking part.
That sounds like a huge shift in power. How are legal folks reacting to that? Does it raise questions about, due process?
It's definitely a significant power. But the view is generally that it's structured to prioritize immediate stability and compliance. In high-stakes financial regulation, the idea is you can't let noncompliance fester while things wind through the courts for years. It makes the consequences immediate. Plus, they've tackled delays another way. There are now compounding daily penalties up to 100,000 dirhams a day if an institution keeps violating the rules. No more dragging feet, hoping for leniency.
Okay, so the enforcement is tougher. Now, you mentioned bringing more activities under the CBUAE's umbrella. Let's dig into that expanded licensing scope, because this seems crucial for anyone in fintech, payments, that sort of area.
Absolutely critical.
Yeah.
The definition of what counts as a licensed financial activity is much broader now. So if your business involves things like open finance services, virtual asset platforms, think crypto exchanges, stored value cards, e-payment services, or even things like financial technology platforms, intermediation platforms, all of these now clearly need a CBUAE license to operate legally.
And if someone doesn't get that license, maybe a startup that's not quite sure if they fall under the new rules, or maybe they're just trying to fly under the radar.
The consequences are severe. We're talking potential imprisonment and/or a fine that could go up to 500 million dirhams just for operating without the right license. And think about what that means. For a big established bank, even a massive fine is survivable, usually. But for a startup, maybe one backed by venture capital, a 500 million dirham fine. That's likely game over. It really forces everyone to take licensing extremely seriously from day one.
So no wiggle room. And there's a deadline looming for everyone to get compliant, especially these newly covered businesses.
Yes, there's a 1-year transitional period, but that clock started ticking when the law came into effect conceptually. The absolute deadline for everyone to be fully compliant is September 15th, 2025, which, as you know, means compliance teams need to be working flat out right now.
Okay. We've talked a lot about the enforcement, the penalties, kind of the shtick side of things for institutions. But this law also has a major positive for consumers, doesn't it? Building trust, making it easier to resolve issues. Let's talk about Sanadak.
Yes, Sanadak, it means your support in Arabic, roughly. And it's genuinely a landmark development. It's setting up the first independent financial and insurance ombudsman unit in the whole MENA region. What this does is it takes what could often be a really complicated, frustrating complaints process and pulls it all into one place. One single user-friendly platform. It should make life much easier for customers.
Right. So walk us through it practically. If you, the listener, have a problem with your bank or your insurance company, how do you actually use Sanadak? What are the steps?
Okay, it's a clear 3-stage process. And stage 1 is absolutely vital. You must start by filing a formal complaint directly with the financial institution itself, the bank or the insurer. Give them a chance to sort it out internally first.
Okay, makes sense. How long do they get before you can take it further?
They have 30 calendar days to give you a final response. If you're not happy with their answer after those 30 days, or if you just don't hear back at all within that time, then you move to stage 2. You escalate your complaint to Sanadak. Sanadak will review it, mediate, try to find a resolution. If that still doesn't work, then it goes to the final stage, stage 3, which is a specialized judicial committee for a binding decision.
That sounds pretty robust. So if someone's getting ready to file that initial complaint or maybe escalate to Sanadak, what documents should they be gathering? What's the checklist?
Good question. Being prepared makes a huge difference. First, when you file that initial complaint with the bank or insurer, make sure you keep proof note the date, get a reference number. Then, if you need to go to Sanadak, you'll typically need a copy of your Emirates ID, a copy of that formal complaint you sent, the institution's final response if you got one, and then all your supporting documents, relevant contracts, account statements, emails, letters, anything related to the issue.
Got it. And what power does Sanadak or this judicial committee actually have? Are their decisions just recommendations?
No, they have real teeth. For disputes up to 100,000 dirhams, the decision made by that specialized judicial committee is considered final and legally enforceable. This gives consumers a way to resolve smaller but still significant disputes without needing to go through the potentially long and costly process of regular court action. One important note, though, Sanadak generally won't take on a complaint if it's already being dealt with by the courts, or if it falls outside their specific scope, which is financial services and insurance.
Okay, that's a really clear benefit for consumers. Let's zoom back out a bit now to the bigger picture changes for the system itself. This law isn't just about penalties and complaints, it's about strengthening the foundations, right?
Exactly. A key structural change is formally designating the CBUAE as the National Resolution Authority. Basically, this means the central bank is officially in charge of managing the situation if a major financial institution gets into serious trouble, like heading towards failure. It's about having a clear plan to handle potential crises in an orderly way, protect depositors, and avoid needing taxpayer bailouts. Think of it as setting up an emergency room for banks.
And they're not just waiting for the emergency to happen, are they? There's a proactive element too.
Very much so. They've established a dedicated financial stability committee. Its job is to constantly scan the horizon for risks, monitor the health of institutions, and have resolution plans ready before trouble hits. And this ties into another theme looking ahead. The law also pushes for integrating things like environmental, social, and governance ESG principles into finance, aligning with the UAE's sustainable finance goals. It's about long-term health, not just short-term fixes.
That proactive stance leads to maybe the most striking new power, I think. The CBUAE's ability to intervene early, before an institution actually fails.
Yes, this is a major shift. If the CBUAE sees an institution showing signs of weakness or significant risk, they now have unprecedented powers to step in. They can force the institution to take specific corrective actions. They can slap on tougher requirements for capital or liquidity. And in really serious situations, they have the power to actually replace board members or even senior management.
Replace management? Wow.
The law explicitly says the regulator can, quote, directly step into the shoes of the institution's senior management.
What does that actually mean on the ground? Stepping into the shoes? Does the CBUAE literally run the bank for a while?
In essence, yes, temporarily. It means the regulator takes over the key decision-making. They can make the operational calls, the financial decisions, personnel changes, whatever they deem necessary to stabilize the ship, protect depositors' money, and crucially maintain confidence in the market. They can do this without waiting for the institution to be technically insolvent. It's a massive lever designed for preemptive stabilization.
So let's try and wrap this all up. Federal Decree Law number 6 of 2025. It really has redrawn the lines. We've got this zero tolerance enforcement, potentially billion dirham fines hanging over institutions, but also this really significant boost for consumer rights with Sanadak.
Absolutely. The CBUAE isn't just a supervisor anymore. It's an active enforcer and, critically, an active stabilizer, ready to intervene directly and swiftly if needed.
So the key takeaway then. If you're running a business, particularly in those newly regulated areas like virtual assets, crypto, e-payments, your immediate focus has got to be compliance review, hasn't it? Especially checking if you now need a license you didn't before. That seems like where the CBUAE might focus its early efforts.
I would agree. That expanded licensing scope is a huge change, and demonstrating compliance there quickly will be vital. Get that review done yesterday, basically. And if you're a consumer, get familiar with that Sanadak process now. Understand the steps, especially that crucial first step. Complain to the institution first. Know your rights and how the new system works.
And maybe one final thought to leave with you, the listener. Think about that power for early intervention we just discussed. The CBUAE being able to step in, replace executives, run the show temporarily, that's more than just regulation. It's about actively managing market confidence from the top down. What does that kind of hands-on regulatory approach signal about the future? How might it shape the resilience and stability of the entire financial system here in the long run?
It signals a commitment to certainty, I think. A foundation where trust is paramount, because ultimately, that's what underpins everything in finance.
A very strong point to end on. Thanks for joining us for this deep dive.